There's something very clear. The central bankers have been very active, too active. The governments are implementing massive deficit increasing policies, but regardless, without real demand, you can't support the entire system with funny money. You can try, but monopoly money isn't accepted anywhere, and that's exactly what they're making of your hard-earned cash. Don't cheer them on. You came here for the truth, so let me unveil that for you. Today, we are going to look at what's happening in the financial system, specifically with the Federal Reserve. I'm going to give you an update on that. And then I want to look at what's going on in the economy because we are seeing many companies today that are filing for Chapter 11 bankruptcy. This is going to give us some insight as to what's going to come in the next few weeks as well as the next few months. There's some very serious things happening today, and those who are focused heavily on what is the next hot stock, I do believe are going to get burned. This is a time of major volatility. Jeffrey Gundlach had posted a few days ago about what the Federal Reserve is doing, of course, buying the ETFs, and then he mentioned, as far as I'm aware, the Federal Reserve has not done this yet. I covered that here on the channel, and then he followed up with this tweet. If the Fed does start buying ETFs broadly and in size in response to recent requests that they do so as to not, quote, let down the buyers who front-ran the Fed April 9th, will not and should not be well received on Main Street. So essentially what he's trying to say here is that the market's expectation was that the Federal Reserve was going to go in, buy up these ETFs, so obviously that's going to be a good thing to purchase. But at that time, they hadn't done so. They hadn't made any official announcement about it. So he's saying that they're going to be a little bit upset if they aren't going into the market and actually buying it. But the Federal Reserve responded to Mr. Gundlach indirectly. Check this out. Directly on the New York Fed website, FAQs, primary market corporate credit facility, and secondary market corporate credit facility. They give you the whole breakdown. This is as of May 4th, 2020. It is brand new information. If you go down further in this page, they say they will begin to buy in May. So it's going to happen anytime now. We will follow this very closely to see what they do. I don't know if all of the specifics are going to become available to the public, but anything I get on this, I'm going to bring it to you. I wanted to just give you an update on the state of what's happening with all of the different Fed programs as we move through the repos when the market started to fall apart and they didn't want to admit it at all, and they started buying anything and everything. I've been covering all of that. This is simply one more step. U.S. Treasury expects to borrow $4.5 trillion in fiscal year as stimulus spending soars. $4.5 trillion. Every time I look at this estimate, it continues to go up. And I told you it would go up. Of course, that doesn't take a genius to figure out. There is no crystal ball here, I assure you. This is what's going on at all levels. The Federal Reserve is pumping it up. The government is pumping it up, or really digging a hole because it's a deficit. How are they ever supposed to grow out of this? Because I've heard it time and time again. We can actually create as much deficit as we want as long as we grow ourselves out. But you tell me, when you're digging a hole that's $4.5 trillion worth, how can you do it? You can't. It's impossible. Of course, you could have the Federal Reserve print a bunch of money and buy that debt, but what happens to the value of your currency? Most people wouldn't even know it, but it would disintegrate rather quickly. Just a couple new examples here that I wanted to bring up. Gold's Gym files for bankruptcy protection amid fitness closures. Obviously, they've had to have the doors closed for a period of time. They got no revenue coming in. They haven't been able to pay their bills. This is the message directly on their website. Essentially, they're going to do the Chapter 11 restructuring, as they call it. In the bold font towards the middle there, they are saying, we're absolutely not going anywhere. So when they do the Chapter 11, it's not as if they just disappear. What I believe is going to happen is that they're going to get rid of the locations that are not as profitable. I'm sure they're going to lay off a whole bunch of people, try to save money this way. They sell off their inventory. They get back whatever money they can. This is usually the process, which I'll talk more about in a second. Recoup some of that and try to continue on. But there's just one issue. This is really what I need you to understand. If you only check out one part of the video, this is the one. I'm going to be referencing this many times in future videos, so let's get into this. Store closing sales are crucial to the nation's retail economy. They help liquidate slow to sell inventory, and in many cases, they fund a company's operations through bankruptcy. Without liquidation sales, retailers will find it much tougher, if not impossible, to stay in business during a reorganization. So think about that for a second. They need to be operating in order to get rid of that inventory, in order for the whole process of bankruptcy to work. Now, the situation we're dealing with today, it's making these bankruptcies more likely. Of course, they can't operate, they're going to go bankrupt. But ironically, it could also make bankruptcies more difficult and lead to delayed filings, with much of the US still limiting non-essential business, and with shoppers nervous about visiting the stores, closing sales are much more difficult to hold. Many retailers are likely holding off filing until they're able to make plans for the stores that they need to close. We probably would have seen more file by now if stores were open. We're clearly seeing a lot of companies engage bankruptcy advisors, but it's not a great time to file. A lot of companies are on hold because you can't get the money you need coming in from liquidation sales. Imagine they're too broke to file for bankruptcy. Renters will have 12 months to repay unpaid rent under new City of Santa Monica order. I thought this was really interesting and I wanted to talk about it for just a second here. While this might seem like a good thing on the surface, of course it's going to help out the individuals, I'm really concerned about the after effects. If you think about this, you've got a lot of people not paying their rent. You've got the hashtags out there that is cancel rent and rent strike. These two are very worrisome because if they're not paying up to the landlords, maybe first of all, they can't afford it, but there's also those who simply would rather wait a while to pay back. This is going to put a lot of pressure on these landlords, and maybe, just maybe, with so much uncertainty that's happening right now, maybe they're going to start to sell off these properties, take a little bit of a loss, and property values, if this happens on a wider scale, particularly with what we've seen with Airbnb on top of that and everything that's happening with the economy, it could pull these prices down. Take a look at US retail sales month over month. It's never been this bad before. And you see, of course, things are shut down, nothing's operating. We expected this for the most part. But to see it on a chart, it is amazing. It's unbelievable. I'm not going to cover all the details in here, but this is definitely a series of charts I'm going to show you that are informative. Tracking the CARES stimulus. Top left, aggregated daily total card spending for households that received CARES stimulus payment versus those that did not. And you could see that spike up with the blue line. If I pull my highlighter out here for a second, you see stimulus checks kicked in, and there is that spike up for households who received the stimulus check. Of course, compared with the yellow line, which is those who didn't receive it. So as soon as they got their check, they spent it right away. Same situation here. They're just breaking it down by the lower income. The spike happens as soon as they get the check. This one is middle income. This one's higher income. But what I noticed specifically is that the highest spike is for those in the lower income. So they desperately needed that money. And this represents a large percentage of the population. This is showing travel and entertainment services comparing 2020 to 2019. I'll let you guess which line is 2019 and which is 2020. I mean, it's shocking to see these, even though largely it is expected. US factory orders month over month, and I'll show you another chart in just a second. This chart goes all the way back to the 50s, and we have never seen anything like this before. This is the new orders month over month and year over year. On a year over year basis, hasn't been this bad since 2015. 2015 was really bad for many reasons. The weakness is definitely there. And then to finish the video off, this is a global problem. It's going on everywhere. This article happens to be about Hong Kong, and their economy slumps at 8.9% in the worst contraction on record. Now, of course, you had the Asian financial crisis. Countries were getting destroyed, okay? They were getting absolutely destroyed. And then you look at this, and it's actually worse. So despite all the money that's there, despite the real estate values, despite the incomes, despite the assets that people have, all of that, the economy is taking an absolute beating. When things get hit, they get hit hard. The higher up it goes, the more exaggerated it is on the way down. People don't get that because they've got too much invested, usually with leverage. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. If you want to see me on Instagram and on Twitter, I've got content every single day. Check me out at themoneygps.com. Hang on a second, don't go anywhere. You saw what's happening with retail, with e-commerce. Things are really changing very fast. I created this e-course for you, my subscriber, so that you can learn about e-commerce for free. Other people are charging $1,000 plus. I've bought those courses before, but I bring the Amazon GPS to you for free. Check it out, theamazongps.com. For those who want to understand what's happening in the financial system, you need to get the knowledge. And there's a lot of garbage out there, let me tell you. If you want it simple, no jargon, no nonsense, these two books have everything you need. Check them out at the link in the description. If you want the audiobook, themoneygps.com. This video really took off. If you haven't seen it yet, I would highly recommend checking it out. Click on it. I'll see you there.